Hey guys, welcome to Stock Talk with Nico Criticos. Today we're going to be doing some stock analysis for Alibaba stock. Alibaba is now at $96 a share and a market cap of $258 billion. So in the past, back in 2019, 2020, 2021, I used to invest in this company and I've made money before, but the last time I bought this, I lost a couple $1,000. And now my outlook on investing in foreign companies has kind of changed a little bit. I'm not as interested. And as you can see, from late 2020 until now, the stock has pretty much just kept going downhill. If we look at, let's see, their revenue, what we're going to see is that they've done a good job growing revenue, right? This is a very large Chinese company that has, we're going to look at exactly how many users they have in a bit, but they have tons of users. They have tons of different revenue streams, all this different stuff, right? So in the last 10 years, they've managed to grow revenue at about 38% per year, okay? Net income, we're looking at an average of 23% per year. However, as you can see, it's very up and down. It's very volatile, not very predictable. So that's not really what I like to see. Then for number 3, the P ratio is healthy. If we look at the chart for this, it is attractive because it's trading at pretty much its average. It's right in the middle, not too expensive, not too cheap. It's at a healthy valuation. So that's not an issue. If we look at their, I would consider this company innovative. If you look at all the different products they came out with, they have Alibaba Cloud, they have the e-commerce store, they own a bunch of other smaller companies that operate in China. So they have they have 939 million monthly active users. So their market share is very strong. It says they have a 47% share in China, and they're selling more than 2 times what Amazon does in America. So they're a very big company, and they work very efficiently in China. But there's lots of risks that come with investing in a Chinese company. For one, it is an ADR, as it tells you here, which stands for American Depository Receipt, I believe. I think that's what it is. Let's see. Yeah, American Depository Receipt. Okay. Represents shares of non-US companies. Banks issue ADRs to facilitate trading on US exchanges. Some banks require investors to pay periodic service fees. So there's stuff like that where it's just you don't get the same trustworthiness that you do with these type of companies that you do with American companies. The accounting is different. The way they report earnings is different. I don't like looking at all their financial statements are in a different currency, just stuff like that. I mean, I don't live in China, so it's not like I have a great idea of what the environment is like over there. In America, it's a little bit easier to judge how things are going, what investors are feeling like, stuff like that. So then we look at their return on invested capital. I put no. It looks like it's between 7 and 8% usually. That's not good enough for me. I like to see at least 10%. If we're looking at the last couple of years, we have 7, 8%. We had 16% in 2020, 13% 2021, but overall not very attractive. Their equity is growing. If we want to look at that, we can see that their equity has gone from, again, this is in what is it? The Chinese yuan, I believe, is the currency. 879 billion 3 years ago. Now we're at 1.1 trillion, it looks like. So yeah, that's right, 1.1 trillion. So they've done a good job growing equity. It is over 15% of the market cap as well. Then we get into the share count. If we look at the share count, we're going to see that it's actually been increasing by about 1%. Not a big deal. That's nothing to worry about. Assets minus goodwill is the ratio here is actually strong, right? 630 in liabilities, 1.7 in assets. That's huge. That's a really big, that's a nice ratio. Profit margin over 10%. Yes, it's usually over 25%. If we want to look at exactly what their margins are, we can see that we have, well, 8% and 3% in the last couple of years, but normally it's 25, it's 20 to 30%. So normally it's pretty good. Cash from receivables are more than average annual income. They do not pay a dividend. This company is over 10 years old. I actually thought it was older. It was founded in 1999. And their free cash flow is growing at about 30% a year on average since the last 10 years. And let's see, we're also going to look at, let's see here, free cash flow. Yeah, so other than 2022, the free cash flow has been very strong and consistent. We're looking at $200 billion of free cash flow. I believe that should be in American. Yeah, that should be in American dollars, I would think. I would hope. But yeah, if it says, let's see. Let's look at Alibaba is providing technology infrastructure and marketing reach, operating through China commerce, local consumer services, all these different companies, cloud, digital media, and entertainment. They have Alibaba Pay. They have all these different things. It's pretty much like the Amazon of China. So again, it is a very strong business with very strong market share and profit margins, and pretty large moats in the businesses they operate in. But it's a kind of risky because it's Chinese. It's an ADR. You know, there's all these other things you have to worry about. There's China and U.S. relations that you need to factor in. It's not like, I mean, right now the United States it looks like they're trying to implement laws to kind of favor the United States manufacturing and production over Chinese companies. So there's stuff like that going on. That's why I just would not invest in this company again. I'm really, ever since I lost money in this earlier this year, at the beginning of this year, I kind of have just changed my stance on investing in safer companies that have proven that they can grow their free cash flow and their net income. And stuff like that. I'm really not interested. Even if it's like a European company, I think there's like French and German companies out there. I'm not interested in that really either. I just like it to be as safe as I possibly can find. So that is my stance on Alibaba. Thank you for watching. If you have any comments or if you have any questions, ideas, anything like that, comment down below and I will get back to you. So thank you for watching. I will see you guys later.